Okay, hello there everyone and welcome to this very important webcast on how to thrive in a trader's market. My name is Steve Chappell, the Director of Trading Systems Development here at VectorVest. More on me here in just a little bit. Hopefully everybody hears me loud and clear. If somebody could let me know, that's always a good start. All right, listen, with all the different opportunities that are out there these days, I think it's very important to right up front let you know if you're in the right place at the right time. So you're in the right place at the right time right now if you currently dedicate or want to dedicate a portion of your portfolio to short-term trading to grow your portfolio faster. All right, so the key definition there, of course, is short-term, and then that probably requires further definition for some because in some respects that could be to the beholder's eye. It's even by definition quite a lenient term. So generally speaking, we're talking days to weeks for many of our trades that we deploy. We hope, of course, that they can, in some cases, go many months, but it's been a little while since we've had one of those. More so days to weeks, okay? We do some intraday trading. For example, we took about a 3% profit on an inverse oil fund, two-time leverage fund today called DRIP. And we've got other trades that we're holding over the weekend, more willing to do so on things like the long end of treasuries, but we of course do a ton of stock trading. That's generally where we like to be, unless you're dealing with the current times like we have now. So let's jump a little further in and we'll show you what we do. My promise to you guys right now is that if you stick with us here, we're going to show you a way you can adapt and thrive no matter what the market throws at you. We actually made money in our portfolio today. A lot of folks, I'm sure that's not the case. My name is Steve Chappell. I'm the Director of Trading Systems Development here at VectorVest, as I quickly mentioned at the beginning. And boy, it's been quite a journey. I've been with VectorVest now, it'll be 23 years, I believe, right here in October. I think it's October 4th is my anniversary date, so it's coming right around the corner. It's been just an incredible journey. And I've learned from a lot of really great folks along the way. And as it relates to this presentation, more so in the realm of technical analysis, but very versed in options and, you name it. So I, however, am just a very small part of a very highly educated, prolific team of people just like me. This is just a quick snippet from our most recent trip up to the NASDAQ, our partners there. And we didn't actually ring the bell, but we got to go through, watch the experience, and of course take some pictures afterwards and things. It was a lot of fun. Yeah, great team building experience, and just enjoyed the trip. It was great to get back up and eat some of that great food in New York City. Boy, I had a delicatessen sandwich that would make your mouth water just looking at it. But anyway, enough about that, enough about me. Let's get on to the meat and potatoes of the presentation, right? So in order to make this whole concept of being able to thrive, or maybe even in the course of what we've seen here this year so far, survive in a trader's market, is you're going to need the right tools. So it says here you need the right tools that will therefore allow you to adapt and then thrive in any market condition. So we've certainly got that in spades. And largely, it's really done a great job at keeping us out of hot water. I imagine what's happening to a lot of folks out there is they're getting some pretty good gains, and then whap, seemingly overnight, a lot of those things can evaporate if we're not careful. So let's get right into VectorVest, take a peek, and show you around. All right, so here's the home page, and boy, speaking of WAP, market had a pretty tough day today. Obviously, that is just further continuation of yesterday. And there's been a lot of importance placed on this latest round of unemployment report. I think some folks were getting involved even before the event, of course, here. There's a lot to that. I don't want to go into the depths of all that per se, but you're getting another indication that's considered pretty reliable that a recession is likely at this point. So given all of that, the market's had a pretty substantial reaction, to all of that. And what we see a lot of red. That's the bottom line. So what we like to do in our little trading room that you're going to be learning about is we like to go with the flow, okay? And what that means is, in the terms of trading days to weeks, we're going to be pretty reactive to changes in market conditions and situations. So as you might imagine then, we've been predominantly bearish over this last week, and we will show you that why and in spades here in just a sec. But you can probably get a feel for that just looking at the center of this screen where you see a lot of red. Well, you see red everywhere, don't you? Okay. If we pay close attention there to this trend column, largely we like to be in tune when we make any new trades with whatever the first two letters suggest. So the first two letters, there's 4 letters in totality, right? The second 2 letters deal with sort of the longer term market situation. And the first 2 letters deal with the here and now, the very short term, what's happening right now kind of perspective. It's called the primary wave. I'm not going to go through all the rules of all these things, just point out the differences, okay? And so if that says down, then what we're going to do is use our indicators, more indicators that we have, to try to ascertain, okay, our short-term directional bias here ought to be down, but are we seeing enough to place bearish trades on the market? And again, sometimes we'll even take bullish trades if they're disconnected from the stock market, like oil or the treasuries and things that we've talked about. Sometimes we'll go that route. Certainly when things are pretty wild at the open already, for example, it's pretty difficult to think about jumping into leveraged inverse funds if you've already gapped down to 2.5%, 3% at the open. Generally, that's a recipe for disaster. So Glenn did a good job today in the trading room on doing some things that were kind of disconnected from that. Now, what we're going to do, though, is then put an emphasis on trying to find some good bearish opportunity in most cases, right? Most of the time, you don't gap down 2.5% to 3%. So if we then go to the next step, we have a tool here specific to the trading room called the Derby. So one of the most challenging things for investors and traders to try to do is to come up with a hit list of stocks. Often because there's all these different potential ways to do that, right? You can run a MACD scan, or you can look at growth, or there's fundamental, there's technical approaches, and there's mixes, and it becomes this blizzard or stew of things that you've got to try to parse through to figure out what works for me. This takes a little bit of a different approach to that. So what this does is it takes all of those things actually, and we call it the Derby because in the spirit of a horse race, what it's doing is it's saying, okay, the top techniques today at this very moment, this is the market close. But as you might imagine, like a horse race, throughout the day, these things evolve. And what we try to do is jump on early each day with what's moving, because the things that are moving, often continue at least for a good little while. So you can start to open them up and start looking at things like, there's a few stocks in here that were on pretty good dramatic moves. And one of those things was volatility. And so this is a 2-time long VIX future. And that sucker went up 47% today. I don't know how many folks saw the VIX. VIX is the fear index for the stock market, obviously. Well, maybe not obvious to some, right? And I don't want to get into all the depths of computation and things, but it had quite a run today. As think of it this way, the higher this goes, the more defensive really the big money managers and things in the stock market are becoming, because you're looking at put call ratios on the S&P 500 along with some other things. So the higher it's going there, the more defensive those tactics have become. Now this indication does become contrarian at some point. So the old expression is, when the VIX is low, it's time to go. When the VIX is high, it's time to buy. Because largely panic, is situations where the VIX spikes, and on the back of that panic, there's usually a really good buying opportunity, right? So you really have to look at the VIX in a couple of different ways. But what we saw today was some panic, based upon that unemployment number. And so logically, one of the things to thought about attacking the stock market with today would have been that panic, the volatility. Now, that sucker moves around, even the 2-time. There's a 3-time called, it's UVXY. For example, it moves even faster, okay? So just the 2-time there, though, that's it looks like it's all roses when it's done, but I can tell you this little part here, even in the middle, makes you pull your hair out from time to time as you're watching your gains and your losses. So it's an interesting set of tools, hopefully already for you, just kind of observing what you've seen so far. And then, as you go down the list, here's contra ETFs, for example. And like I mentioned, when you open so violently down already, A lot of times because they have to re-lever throughout the day and everything, and just the fact that the stock market, generally doesn't like to continue all that much farther on such a big gap down, unless really the stuff is what is hitting the fan. This is largely what you tend to see. So, but in here, just to point out further kind of what this tool is doing, you've got DRV, which is on real estate. That's inverse, right? So if what's represented by that ticker symbol is falling, it actually goes up. So what we actually saw by the end of the day anyway was a little bit of strength in real estate again, surprisingly. Now, having said that, if I change, this is off prior close, so that factors from the closing prices all the way to the closing prices today. We can change this to the market open. And when we do that, if we go and find, say, worst performing contra ETFs, we can see if there's any differences. And you could do this throughout the day as well. So you have a way to alphabetize the list. Like if you've got a favorite search or a handful of scans in VectorVest that you really enjoy using, it can help you separate, okay, I really love these 12 strategies or whatever, but which ones are really on the move, confirming, hey, it's probably a good thought, that kind of thing. But yeah, you can see now from the open, still a number of these things, of course, ended lower. You can see a bunch of them on NVIDIA. NVIDIA has really come under a lot of pressure. FANG stock somehow ended level. That's interesting. Don't see level all that much, and I know that's not a halt because that's a very liquid ETF right there. But a couple that are still really under pressure, and that makes sense to me, is, for example, Tesla, and this is Tesla with leverage. So, let me speak a little bit to the coaching that you get in the room. So, if I can give you this as a classic example, I've largely been holding folks back from trying to trade Tesla for quite some time, except recently, but we gave some emphatic guidance on, where to draw the line. But just in the spirit of this, could TSDD be a good opportunity again Monday? Well, it might be. So let's take a look at that and what I mean. If I go to graphs here, we'll go look at just the underlying. We'll look at Tesla itself. Tesla, a lot of this run up here was on pure hype. Okay. Now, there's not to say that you can't trade hype and you can't make money with it. I find it very difficult, personally, unless they get on a move like this where you start to see the potential to get to a prior swing high, right? So our guidance here recently, some folks just couldn't resist. It's all right, well, once you start to get up a little bit north of 250, I would start looking at trimming positions and if not, just flat out cashing, okay? That was likely where it was going to turn around no matter what happened, even if the news continued to be good, because when you look down at the bottom, that's the bottom line. Earnings is going the wrong direction, and a lot of folks don't know that. A lot of folks still don't understand that. So yeah, I mean, you can get some news on robo-taxis and things on stocks, and it can drive stock prices wildly higher. I actually, as a trader, more prefer to take the other end, wait for the madness to finish, right, or look like it's culminating, and take the other side of the trade on the way back, right? And that's what we're in the midst of seeing happen here. And when you look at price a little bit more closely, it just made another new short-term low. So you're still on lower lows and lower highs here potentially. You're definitely on lower highs, right? You've got one lower low there. So actually two now that we've gone lower than that price. So you're on downtrend, as a matter of fact. Okay. We'll see where the next pivot is, but you're on downtrend. So that speaks a little bit to the level of coaching and things that we're going to end up putting around all this data to try to help you guys make good decisions, better decisions with these things that are flashing in front of us. Because if we're not careful, we get caught up in all that hype, and that's where things can be can turn out bad, even though they should have been good. Okay, so if I go back to square one here and just kind of look down through the list, other observations you can make is there's a lot of price and volume type scans that we're moving today. I don't see blue chips, I don't see growth searches, I don't see any of the like. What I see is just P and V, people taking advantage of PNV type patterns and setups today. You do see, some new buy rated stocks. So those will be stocks that have already been beaten up a little bit and that are reattaining a buy recommendation in VectorVest. That makes some sense too, right? Because at least those stock prices have come down and are starting their upward track again. You've got Seattle Bear Beaters. So we can go through and we can analyze all these things. And when you click on one, like what's new buys, you might be interested in that, right? So VectorVest, we know, being VectorVest subscribers, or maybe you don't know, maybe you're new to VectorVest here, our VectorVest subscribers know that when you receive the first one, you're likely to receive more for the days to come, right? So if we click on it, you come in here and it'll give you a list. So those are some of the stocks that are just hitting buy recommendations in VectorVest. We're seeing that UVIX a lot, aren't we? And that one made some sense today based on, let's call it over-exuberance downward, honestly. Not to say that it's not warranted maybe in the more moderate to longer term future, but, all in one day, it was a pretty hefty day. So there was a lot of volatility. All right, let's get out of here and actually start, trying to put some more solid type guidance around all this. So that's the searches. I know they got funny names, but as you peruse the list, you'll see things like MACD and so forth, eventually some things that are a little bit more familiar. But that's the strength of VectorVest, is putting the right kinds of stocks in the right kinds of situations at your fingertips very quickly. That's what we're trying to illustrate, okay? If we go to the left here, we've got some manipulation that we can do to this search list. We could say, hey, look, I'm a trader and I've been around a while, and last thing I want to do is trade stocks less than $10. A lot of searches in VectorVest have just $1 minimum as a requirement. So now what you're doing is you're indicating to these scans, no, not $1, $10. Okay, $10 minimum. And of course, a lot of them are way over $10 that are going to be on the list. But you can't look at anything less than 10. Sometimes that'll give you a little different perspective of what's really happening once you get out of the penny stocks arena, okay? Which a lot of wild stuff has been happening there ever since the whole GME thing. It happens every day. We see a stock going up 60, 70, 80%, it looks like. And you dig in, and there's no real reason why they're doing it. Not a good one anyway. You look at this volume, and you can up that. So now you're looking at things that are plenty liquid, very tradable type assets. So that's something to know. All right. We usually start at square one just to get a feel for the overall what's on the move, even if it is the small caps. We do some small cap trading if that's most appropriate. Okay. Come down a little bit further, and you'll see this little box here. Now, we started by saying primary wave is down, right? So we'd be looking for things that are congruent with that overall message. So we use this timing indicator to give us that reassurance. Hey, we've got the more global perspective of the primary wave down, and now we've got an intraday perspective of, yep, still down, okay? So you have two bars here. You got green and red. When red goes above 1, the bear side is more favorable. We like to use actually not just 1, but 1.2 to try to ensure that these things are separating. So what we do next is we, diverging, in other words, for you true technicians out there. If I click on the bars, then we can see what all that guidance would have implied over the last few days. So as a quick example, short opportunity here, and don't get so tied up so much into the overall magnitude of the movement, because our job is to find the ones that are going to outperform that direction. So as long as things for a while continue to push down, our other job is to find the things that are going to take the most advantage, maybe even if the market reverses. Okay, so we're just trying to position into the trades with confidence. And so, basically what you see here, if we're looking at that 1.2 watermark, and we're looking at the red bar expressed as a line, on 4 of the last 5 days, we should have been largely positioning short, okay? Now, Oops, get that out of here. Get off the screen. Weird. Go away. Okay. Go away. Now, the other thing I'm going to add a layer of nuance to that. So not only do we like to see the green or the red above 1.2, we like to look at the last 15 to 20 minutes to make sure that we're consistently moving that way. So as this thing starts to bobble, you would come off of the gas there a little bit and try to do the best job you could do to ensure that, yep, bulls are still in full control. The easiest way to know that is when it starts to make a new high water mark, right? So then you can get back on I can go out there and start to enter some bullish trades again. It does not mean that when it turns bearish that I necessarily have to even shut those trades down, because we're going to put stops on the trades, and things of that nature. And if the trade, you could be up 16% in a trade, you're not going to shut it down just because this changes gears here. It's a warning for sure that it's likely coming, and maybe in short order. But largely you just want to let your stops dictate the rest of the action. Hopefully that makes sense. Okay, so this is literally just to help time entries. All right, let me get out of that. And then you can, currently we're in TLT. That's the only position we have. And we'll see where that goes. But if I bring that, as I mentioned earlier, we did trade Drip, and I think he bought Apple today, which I found interesting. We had a little discussion about that, but it's this one makes a lot of sense. So this is basically, if I try to put it as simple as possible, we're betting that long-term interest rates go lower. That's essentially what we're doing. Okay. You could look this up on Google and study it a bit more, and there's better definitions to say, but that's the easiest to put out there and the easiest, I think, for most folks to understand. Okay. We're long the treasuries. You don't want them to become more valuable. So it is flying, and hopefully that's going to continue. But the other thing that I'm drawing here is kind of some more insight into the level of coaching. So this is a pattern that I see quite often and that we trade quite often, and that is a pattern of essentially flat peaks and higher lows. So it's a wedge. It's an ascending wedge. You have higher lows is the main equation to that pattern. So what we're waiting is for a new short-term high to establish itself and then jump on the trade and take it. So we actually took the breakout day, which normally I might even wait for that next day, but we went ahead and took the breakout day here on this trade. We're up about 6.5% so far. So that's the kind of thing we like to do. Okay, is we're gonna look at taking now we've got a 50% target and a 10% stop loss on this trade, and that 10% trails. It trails for the first 10% up, then it kind of floats, and I don't want to get into all that. We've got a really sexy stop that we use called Profit Locker. Okay, it's not a simple linear trail. It's better than that. But initially, it is a simple trail for the first 10%, then it kind of bellies out a little bit. You get a little volatility quotient in there, okay? A little parabola that widens before it sharpens, before it sharply closes in. Just to give you, once you're nicely profitable in a trade, give you a little bit extra cushion than just a flat trail. Anybody ever been knocked out of really good trades by flat trails? Constantly 10% below the high price? I mean, that happens a lot. So our hope is that we don't have as many of those things happen. So that's, in essence, the group. So every morning what we do is we get together. First thing we do, right, is we look at the market, see how that's doing, look at the color guards, see what that's telling us, and then pay primary attention or focus to the primary wave. If the primary wave is down, any trades that we're going to be looking to take that day are either going to be disconnected from the stock market itself, like commodities, or we're going to be playing stock short or buying contra ETFs, okay? If this is up, we're looking to buy stocks. Still could do some commodities if we see something interested there. So commodities are independent. They can be going any way they want. If we like what we see, we see one of those patterns, we'll take the trade. And that's how we survive and thrive. We got the right tools to do it. The next thing is just make sure. We often talk about follow through. You get a base end of day signal. That's great, but then that next morning, a lot of people have questions. Well, these guys said, but you want the market to go up some more. Well, now you've got an actual indicator that says, yeah, it's up enough. You can continue on with that idea. Or if you're on a down, and this is 9:35 this morning, and you're at 1.43 on the bearish down indication, yeah, you should be looking to buy contras, sell short, those kinds of things. So it's really that simple. Then we come over here and we start looking through the list, and we'll do that by just focusing on bearish. Again, if this was 9:35 this morning, okay, we got to pretend here for a sec. Then we would start looking at some of these top scans. At that time, they could have been a little different than they are now. That's okay. Idea is, and most of them do, follow through for the continuation of that day. All right, and so you open them up, you start looking at the potential trades that are in there, and away you go. Different kinds of strategies, and we speak to that a little bit. So yeah, you can have a situation where the top strategy is far and away doing better than the other ones. It still might not be right for some folks because the methodology in there might be a little uncomfortable. For example, like ballistic new highs, if we look at these stocks, you're talking about getting ready to load up on a short position on a stock that's hitting a new high. That's the idea. These things are too ballistic. This stock, they don't even make money, these guys here, which is interesting. So if the stock market really hits the skids, these will implode. That's the idea in the methodology. You can see this one's already starting to do it, so this would be a better candidate actually. Okay, you don't want to take the ones that are still pushing hard. You want to look for the ones that are starting to turn. Those are going to be your better ideas. So we CDNA looks better. Even HWKN is starting to really lose that juice. Right, this looks maybe one of the best yet. And so on down the list, okay? And, this guy here, they had no business going to 25. I mean, like zero business going to 25. But what you don't want to do is, like I said earlier, is short on strength or perceived weakness. You want to be really sure. And so you want to actually see some red and some turn, and hopefully we can pick up on some pattern. We had dark cloud cover here, and we're starting to follow through. You want to follow through on that the next day. But sometimes these meme stocks, I can tell you what, I've done some short selling on meme stocks, and it'll set your hair on fire a little bit sometimes before it gets really good. So anyway, enough about all that. All right, guys, I don't see many questions. Let me just double check here, make sure I didn't miss anything. Looks like there was at least a comment. Let me just pull that up. Sorry, I got to keep my head kind of down and in that webcast mostly. This is Madeline. Hi, I just learned about your site and signed up for the webinar seconds before it started. Unfortunately, I missed the beginning. Oh, yeah, it's recorded. It's recorded, and I'm probably going to send out a recording from even the last one because, it's kind of a more traditional day than what we had today. But it's cool. You're kind of getting see the contrast, right? So we're focusing more bearish here. We were more bullish back then, and rightly so. Okay. It'll be cool for, I think, the folks that have been to the one today to see that. Yeah. So welcome. Thanks for checking us out. And no worries. You're going to see a complete other webcast even, actually, which I think will be cool. All right. Guys, I don't see any other questions here. Oh, there's one. Okay, but today's interesting. Please. Yeah, well, we'll see. I can't do more than one. Yeah. I tell you what, just shoot me an email, Madeline. I'll see if I can't try to spend some time with you or something, okay? SteveC@VectorVest.com. See what we can do early next week, okay? Be glad to do that. take pride in helping people, man. That's what we're put on earth to do, you know? Okay, so that's it, guys. That's going to be all for today. Hopefully I've showed you enough. That's all I can make do with what I've got here at the moment. So today what we learned is how to keep the wind at our back. We're going to do that with primary wave and intraday DTI number confirmations, okay? We learned a stress-free way to do it. I mean, there's not a lot of stress in trying to figure out which ones to buy or which ones to pick or anything like that. We still do eyeball the charts and everything, but you know, that tool puts a lot of candidates on our fingertips very quickly. So we usually end up with about 5 or 6, sometimes 10 or 12, depends on how good the day is, right? As few as maybe 4 to 5, as many as maybe 10 to 12 stocks that we were ready to maybe trade that day before the market even rings, before the bell even rings, okay? So we get together every morning at 9 o'clock Eastern. That's New York City time. And then we stay together until 10:30, essentially. That gets us through amateur hour and all that stuff. And a lot of the ebb and flow of the market starts to work itself out, you know, by that time typically. So that's why we've established those time frames. But certainly on most occasions we like to wait through to about 10 o'clock shortly thereafter before we do a lot of our trading, unless the numbers are so strong where it indicates there's no reason to wait. Okay? So it's very stress-free, as you can tell. I mean, you know, these are probably questions that you're already thinking of, and I'm, you know, trying to provide some clarification. There's no such thing as you can't do it. You certainly can, and I can make it happen. We've been doing this trading room now for 9 years. I've largely been in there now for about 5 myself, and I've been with VectorVest for 22 and been teaching since I first got here. We've had a lot of fun. We've had some really, really, really dynamic years, and you know, our average annualized rate of return, I think it's kind of come down here a little bit, but we're still north of 30% annualized on average, okay? You know, we tend to make money about 8 months out of every calendar year at minimum. And that's even what we've done so far this year. We'll see how August goes. August looks like it's going to be a tough month. But even if we have a bad August, we'd still be able to give up one more and still meet that minimum 8-month threshold I like to achieve, okay? All right, the numbers aren't quite as good this year as I would like, but you know, we're still hitting some important metrics. We're moving the ball. So you guys can adapt and thrive no matter what the market throws at you. This group will be living proof, and you're going to get a period of time to try to make that decision for yourself. So, and it's not just this webcast. So even if you're interested at all, and I'm even talking to Madeline here, who's been pretty vocal, look, there's not anything that's going to be able to explain the group as well as just getting, you know, butts in seats into the room, for lack of a better term. You get 30 days. You're going to be in a room with me or Glenn or Jerry. So Glenn Tompkins, Steve Chappell, or Jerry D'Ambrosio. We are the 3 traders of the outfit here. Now, I use the term somewhat loosely. You know, I wouldn't classify any of us as professionals. Now, we've done a lot of studying of professionals, and we do a lot of things in tune with how professionals should trade. But you got a lot of experience. That's had a lot of training, okay? And what we do, what folks will tell you is, you know, even if you end up not doing a trade at all for the 30 days, it's quite an education. You know, sometimes it's an education in how turbulent the markets are, and other times it's like, wow, you know, this. So it's a lot of fun. Most importantly, I think it's interactive. So we're in a venue now online where all of our group members, of which there's many hundreds, we get together every morning, and you can even talk to one another. And so a lot of those guys and gals, which I think is very important to say, we've got a strong contingent of female traders in the room now. I think is awesome. And you know, everybody likes to talk and share ideas, and we look at those on screen as well, and you know, try to make some good decisions. So hopefully we see you there. It's worth the $29, I guarantee. So, I, you know, I can't even buy a good cigar for 30 bucks anymore. So hopefully we see you for a month. All right, guys, I got to roll. Okay. We'll see everybody next week. It starts Monday through Friday. Every day the market's open, we get together. And if you sign up, tonight, let me put the trial link out there. So this is going to be VectorVest.com/thrive. Okay. So those of you that are on YouTube, you guys know what to do. Those that are in GoToWebinar might need a little more help sometimes. We're going to put the link right into the chat there. And we're also just going to put it on the screen so that people know where to go, okay? VectorVest.com/thrive. And that is 29 bucks, 30 days. It's going to give you roughly, 25 trading days roughly, most months, okay? We do have Labor Day coming up, so I can't guarantee the 25. I'd have to look at that, but you get the idea. It's no more than like $1.12 a day or whatever it is. It's ridiculous. It's ridiculous. You're going to learn all about VectorVest. You're even going to learn a lot of technical analysis that we've charged people thousands of dollars for to learn all these patterns and things, So all of that for about $1 a day. We'll see you guys later. Good luck. We'll see you soon, guys. All right, good luck. I might be able to do that, Madeline. I'm going to see what I can do. All right, we'll see you soon. Bye now. Oh, just really quick, I just saw this question from Rahul. So you'll get Profit Locker as part of this deal. So you're going to get real time and the Derby tab, but real time includes Profit Locker. So you'll have it, okay? All right, good luck, guys.